Are you having trouble being consistent in the market? I know sometimes it could be a little frustrated, but trading does not have to be so hard, guys. My name is Ovi, and I'm here to tell you that trading is simple, not always easy, but we can be consistent in the markets continually. So yes, we may have some bad days, some down days, or even one bad trade. It doesn't matter. The main thing is that you want to stay consistent in the markets, okay? And I'm going to help you navigate through all the confusion, all the noise. Again, my name is Ovi. I'm a professional trader of over 2 decades. I'm here to help you. All right, so let's go. All right, traders, before we begin, gotta give you a quick disclaimer. This is only for educational and entertainment purposes. This is not financial advice. Okay, now with that out of the way, let's get right to it. Okay, so we're on the ES500 E-mini, which is the futures market, and we're on the 30-minute chart. All right, so just to point a few things out to you. Now, the first thing that I want to show you is the 200 period moving average, which is this thin line in this area right here. Okay, so I make it thin, so I don't want to have a lot of clutter on my chart. As you can see, there are only 4 indicators, right? So we have the 200 period moving average, we have the 20 period moving average, which is this blue line in this area, and then of course the 8 period EMA, which is the red line. So the 8 period EMA is a moving average. However, it is an exponential moving average. So it gives me the history of the past 8 candles, the closing history. However, it has more emphasis on what's going on right now. So that's my main go-to moving average when I trade is the 8 period EMA. So I want to know what is the relationship relative to the 8 period EMA. All right, so right now, as we can see, the price is down, the market is down, everything is down. So how can we use that to our advantage? All right, so we're going to take a look at a few things. All right, so first thing is we're going to go to the CCI. Now the CCI, which is this thing right here, it looks just like the RSI. However, it has not just the relative strength, but however, it also has the momentum as well. So I want to know where the market is going to pivot, where it's going to turn, where it's going to pause. So that the CCI helps me in that aspect, right? So very important tool that I use in my trading system, right, or strategy. So we established our position, right? Our position is below the 8 period EMA and the 20, so we are in a negative position. All right, so this is the 30-minute chart. So it's a higher time frame. So what we'll do next is go down to the lower time frame. So when I do all my trades, I time all my trades off of either the 2-minute time frame or the 5-minute time frame. All right, so preferably I like to trade from the 5-minute time frame. So let's go to the 5-minute time frame. So as we can see, same scenario. Market price action is trading below the 20, below the 8 period EMA, and also the 200 period moving average. So everything is pointing to the downside. So our next move, all right, before we start to trade, let's look for a few confirmations. All right, so what I want to see is that the next candle, this candle closes below the 8 period EMA. So we can easily jump in and say, okay, let's go to the downside. However, we don't want to do that as yet. We want to be very patient, right? So as we can see, the bears are definitely in charge. So we can see that that candle is turned red. All right. So typically, when you see that, you want to say, oh man, let's go to the downside. Let's jump in and short this thing. But no, let's wait, be patient, and see what happens next. All right. So we're going to wait until that candle closes. All right. So everything is looking good as far as looking to go bearish in this market. However, we have to maintain our composure because we're professionals here. We're not, a bunch of rookies. We're professional traders. So while that candle is trying to give us that indication, or is trying to complete, let us look at it a few things. All right. So on the right hand side, we have the this is my what you call it, the order tickets, right? This is where we place our trades. This is also where you can see on the right side where all the different the price action. You can see the contracts on the left hand side, which is the buy and the sell side, and that's all that is, guys. Nothing complicated. It's just telling me, okay, the amount of players that we have on this particular time frame for each contract price, right? So we are bearish, and we are looking to short at some point. So we can see price has closed below below the 8-period EMA and the 20-period moving average. So let's take a trade right now. So we're gonna short
Order filled. Order filled.
two contracts for the ES 500. All right, so we're in the trade now, guys. All right, so far so good. Looks beautiful. So what we're going to do is we're going to put our stop loss just right above the 20-period moving average in this area. Okay, so let's do that right now. All right, so we are, give me 1 second. All right, here we are. So the stop loss is in this area. All right, we have the confirmation that the bears are in charge, and see, we have that big push to the downside. This is beautiful. All right, so at this point, we're in the money, we're doing well, and so what we want to do as price progresses, we want to take off at least, let's say if you had 10 contracts, then you would take off half and just let the others continue, and then you would gradually scale out. So at this point, what I'll do is just go ahead and just take out one and just have one contract.
Order filled.
All right, so that's it, guys. Nothing to it. We just look for our trade setups. We look for indications. We look for confirmations, and then we take our trade from based on information that is given to us. So we never trade based on how we feel. Like, yeah, I feel that the market is going to go all the way down here, but we trade what's in front of us. So instead of trying to predict where the market is going to go, our job as traders is to try to find the likelihood of where it won't or will not go, right? So we're, from that standpoint, we're looking, for those opportunities. So what do? We establish a few things. We establish that the price is in a negative position. So our position relative to the 200, to the 20-period moving average, to the 8-period EMA is to the downside, right? So we're in a negative position. Can this change anytime? Of course. But however, we see that everything is pointing to the downside. Now, the CCI is trading below this yellow line in this area. So this tells me that the momentum to the downside is very, very strong, right? Once we have a move above that negative 100 line, we can say that, okay, there is some bullish strength, right? But for the time being, we're in a negative position and the price is going down. So let's go to the 2-minute chart, and same scenario. Well, we're trading above this line right here. However, on the higher time frames, we're still below the 8-period EMA, which is so that's one of the things that we keep our eye on. We got to make sure that price is trading below that red line. So the 8-period EMA is considered in the professional terms the trigger line or the T line. So that's where you would trigger your entries, and also where you would ideally either close out portions of your trade or get out altogether. All right, so as we can see right now, the bulls are trying to push the price back up, or above the 8-period EMA. So what would trigger me to get out of this market? It depends on a few things. So the first thing that I would do to get out of the market is if, for example, price action or the candles close above the 8-period EMA. Then I would say, all right, let me just get out and then see if we have maybe a push above, and then have something like this in this area where it kind of pushed up above the 8-period EMA and the 20-period moving average, and then we'll just wait to see if it closed below the 8-period again. So one of the key things that we look for is, for example, in this area we see this big elephant bar. Now guys, this bar, in order to print this bar, you need about, I want to say maybe $500 million just to move this bar to the downside. All right, so we're looking really good right now. The 20-period moving average is being compromised, and the 8-period EMA is being compromised, and we're to the downside. So essentially, we're just going to wait, be patient, and see which direction this thing goes. And we're pretty confident that it'll continue down to the downside. Now, let's take a look at the higher time frames. All right, so we're looking at the 10-minute. All right, let me go to the let's go to the hourly. See how that looks. Everything is pointing down, guys. Let's see. All right, let's go to the daily. All right, so each bar is 1 day. As you can see, same scenario. We're trading below the 200 moving average. We're trading below the 20-period moving average, which is the blue line, and of course 8-period EMA. So it's the same thing no matter what time frame that you're looking at. Now, if you were an investor, for example, and let's say you had a good amount of money where you can short the market, you had reasons to believe that the markets were going to go down. Now, you would probably have entered in this area right here. You would just wait for this daily candle to close below the 8-period EMA, and then you would say, okay, let me put my stop loss somewhere above the top of this candle or the top of the structure, right? And then that's it. You would enter, and then as long as price action had stayed below the 8-period EMA, you were in good shape. Now, in this area, it tried to test it a little bit, right? As you can see, but it came back down. So you would be a little bit concerned, but you would wait to see where that candle would have closed below the 8-period EMA. So price continued downward and kept going. All right, and then we see in this area where it fell below the 8-period EMA. So we have a space, and then we had a little bit of a rebound in this area. So we see the color change, right? There's a color change in this area. So I would be a little concerned. I would say, okay, let me take off half, or take off 75% of my investment, and then let's see where the market goes after that. And of course, it went up through the 8-period EMA, and then continued on, and then closed above the 20-period moving average. And we were thinking at this point maybe that price will continue north, but no, we had a color change in this area. Still uncertain, not sure, right? And then 2 days later, it closed below the 8-period EMA and the 20-period moving average. And so we had our bearish signal in this area, another retest again, another scary moment, right? However, we say, okay, let's take off half this time. And then the next day, close below the 8-period EMA, and the rest is history, right? So that's how we trade the markets. We don't trade based on how we feel about things or the news. You trade the news afterwards, right? In my opinion, where some people they trade it, the news if they're like an options trader or whatnot. But however, if you're an investor, you don't care about that stuff. All you care about is the long term, and then you would probably manage your trade maybe once a week. You check in on the charts, and you see, okay, price is trading below the 8-period EMA. I'm happy. All right. So if you are going long in the market, the same thing, right? Same thing. We see over here. Now these are the daily chart. This is the daily chart, and we see that price is closed above the 8-period EMA, and the same scenario. So pretty much, we keep it nice and easy, simple, nothing complicated. We use those basic fundamentals as well as those moving averages, the 20-period, the 200, and also we use our trusty CCI as well. All right, so guys, if you want to learn more about how to trade and how to be effective in the markets and how to be a successful trader, then just like and follow for more, because I'm here to help you. My name is OV, and thanks for listening. Remember to like and subscribe. All right, take care. Bye-bye.